For Tesla, it would be the basically the competition, facing the competition, and the fact that in order to keep those margins, it's hard to keep those margins while they're lowering prices.
Can you imagine if you told Ford and General Motors and Stellantis 19% margins? They'd be like, oh my God, they love 19% margins.
I think margins actually start to increase. I think this is going to be a golden year for Tesla. At the end of the year, I expect them to be above $1 trillion.
Well, all that and more. So let's get to it. At the closing bell on Friday, Tesla stock finished down, resting around 252.54. The stock is up a few cents in the after hours. For the week, Tesla finished down a little less than 1%, still up over 7% for the month. If we go back 90 days, Tesla is up over 3.5%. And year to date, Tesla is up over 113%. Just like I previously mentioned, around noon Central Time, I made a decision whether or not to roll or cut bait with this 255 call. No roll for me. I'm perfectly content going into the new year with the options that I currently possess. Got a couple calls that will expire on January 19th. I fully expect a bullish move from now until then. I'm just hoping not too bullish. But hey, if Tesla soars back over 300, you won't hear me complaining too much.
Tesla's up this morning, but it's kind of been stuck under $300 and far removed from many of its mega cap peers making all-time highs. Seems like you don't think they're going to catch up anytime soon.
That's correct. I think they face pretty much structural headwinds going forward into 2024 and beyond due to increasing competition and the way that their supply chain and everything is very vertical integrated.
Vertical integration is a bad thing? The competition? What?
They're going to face that kind of headwind, as well as some consumers' concerns due to recalls on the Cybertruck and so on. So it's very early on for them. So I think the market got overexcited about them. I would sell, and buy them on a big pull down and a significant pull down.
Tesla story here seems to be pretty mixed because they certainly demonstrated production prowess on the EVs compared to GM and Ford this past year. But then to your point, too, just the financials are not as compelling as buying, a big cap, stable tech company that has been the favorite of investors the past year. So which part don't you like about it? Like, what's the biggest drag in your mind?
For Tesla, it would be the basically the competition. Facing the competition and the fact that in order to keep those margins, it's hard to keep those margins while they're lowering prices.
It's hard to take guys like this seriously. The competition is nowhere to be seen. They're scaling back on their EV production. The only whiff of competition that there is in China and maybe the EU. That's only because the Chinese manufacturers are entering that market as well. Tesla is the only one making any significant margins when it comes to battery electric vehicles. They don't give a shit about what Li Auto and everybody else is doing. They're setting prices in real time to their demand orders. Couple that with the price of batteries and all the other essential raw materials. Vehicle prices from competitors is least of all going to impact the price of a Tesla vehicle. Oh, Francisco. It's gonna be hard to take what you say seriously from here on out.
I mean, it's just the basic economics behind it. So that they got that structural pressure that it's not going to go anywhere anytime soon. And you got to wonder, they're doing something significantly different than what they've done in the past, to merit a much higher stock share price, and it's not happening.
What's interesting is even after some of those price cuts, their margins are still better than Ford GM. So I guess that's not their competition. Are you talking about some of the other EV startups? Who's the biggest threat to Tesla in your mind?
Well, I would go into Asia, to the Chinese market, basically, and look at the battery makers and so on, and they can probably produce a lot more of the same with a lot more cost efficiency. So they're the biggest threat. It's a global market, and I think Tesla has to being the first one in the market, basically with a compelling case for EVs and so on, to get a good market share. But at the end of the day, they're not going to go much further than that unless they can produce a $25,000 car in the U.S. and so on,
I wonder if that is Tesla's plan, to produce a highly affordable car with half the cost of the production. I wonder if that price range is gonna fall somewhere under $30,000. So what Francisco's basically saying, all bets are off if they're able to produce the next gen vehicle? No Sherlock.
Margins right now are definitely a big part of the story, especially after all the labor stuff ate into Ford and GM. Tesla deserves some credit, though, for not dealing with all that. Seems like their employees are pretty happy.
Tesla's a great company, but I got to look at it from a different perspective. I got to look at it from the stock, from the share price, and see what it's doing and where it's going to go. So it doesn't negate the fact that they're a great company, that they've done great things for their employees, and they got a bright future. But in relative terms, do we want to invest in Tesla right now, or would I rather wait? I'd rather wait.
Oh, you'd rather wait until they're obviously $1 trillion company. Good luck with that.
Talking Tesla, shares are up about 107% so far this year. Kev, Dan Ives, the Uber bull that we have on the network occasionally, put a price target of 350 on this from 310, says it could get to $1 trillion market cap in 2024. He's still bullish, but he's always bullish on Tesla.
It's the question is for Tesla this year, and it's one of the Magnificent Seven. It's one of the charter members, so it's in the play with all these other names. But what's the demand for EVs going to be, right? Is it going to be enough? He's going to be the leader in EVs.
Right.
Is it going to be enough where he can get margins to go back up? Because he's made his play to get market share. He's done damage. Remember, you're starting to see some mea culpas from some of the leading car companies, like pushing back.
Ford was one. They're pushing back production.
Switching to hybrids instead of pure EVs.
Yeah.
They're doing other things.
I hope it isn't fatal. I'd be remiss if I didn't talk about Tesla's hidden margin story. We just took delivery of our Model X. I was paying for the FSD subscription on the Model Y. This time around, we went ahead and paid the $12,000 up front. Now, if you've been following the Tesla earnings calls like I have, you understand that all of that FSD money is considered deferred revenue. Now, I'm just one car out of 1.8 million that will be delivered. Now, FSD? Typically an American situation. About half the vehicles have a significantly higher probability of either having the subscription or outright at the purchase of the vehicle. But individuals paying for FSD? That's been going on for a few years now. Talk about instant margins. Whenever they decide to put that information in the earnings report, Tesla stock's gonna take off like a bottle rocket on New Year's Eve. There's just no telling when they will do that.
Is this all going to be about the consumer still wanting electric cars at this point, or are they going to run out of money where they actually can't buy new cars? Is that going to be maybe a theme in 2024? Your thoughts here, Joe?
I mean, that's a theme in 2024 for all the durable goods, right? I mean, the last print looked good today, but it's something we have to kind of keep an eye on going forward. So yeah, it's a story for Tesla, but it's a story for all the automakers. The only difference is Tesla gets a monster multiple where the other ones don't. I mean, that's the bottom line, right? Because of their first mover multiple that they get.
I'd say it's more than a first mover multiple. Tesla's multiple is something a little more ironclad. Their primary focus is on automobiles right now, but they have a growing energy division as well. Software. Second to none, doing over-the-air software updates at will. Their supercharging network stands alone. How the can't charging companies be better than Tesla, a car company, at supercharging? I mean, what's the deal? Tesla is refining lithium, making batteries. Their multiple isn't about being a first mover, it's about their outstanding potential to grow.
Dan Ives, as you mentioned, his call for the upside, I think it really comes down to the health of the consumer, because I do believe that there is still demand for the EV products, and a lot of it's going to come down to the demand in China and how much of the recession that we saw in China, that kind of deep recession, are we on our way out of it? Right now Tesla's already starting to raise prices in China, and they've seen some steady demand in this region.
What? You You want to know how I feel the competition is going to play out in China? People are going to try out these other vehicles, BYD, XPeng, Li Auto, and all the others. But at the end of the day, you're going to have a Tesla experience and you're going to have some off-brand experience. If you're going to be paying this amount of money for your vehicle experience, you might as well get the best in class. And while EVs are pretty decent over there in China, they still pale in comparison when it comes to the three pillars: functionality, performance, and dare I say style.
Now we got in an area where you talked about those margins, right? Gross margins, they did decline from 27% in June 22 down to 19% in October of this year. So, they pushed them down, they squeezed out competition, and can they stabilize prices at these levels and then kind of get back into that above 20% gross margins? I think if they can do that, and if that's the story for 2024, then the company and the shares could do very well.
This margin story is so utterly short-sighted. Every time I hear people talking about it, bulls and bears alike, I just can't help but hear, damn, the opportunity is so grand. How can you possibly think about margins when the growth story is so huge? Talk about missing the forest for the trees.
Full self-driving, that is going to be a product they're going to be able to license. They're already getting all the other OEMs to get on their supercharger network also. Yeah. So maybe, those are high margin businesses.
Can you imagine if you told Ford and General Motors and Stellantis 19% margins? They'd be like,
yeah.
Oh my God,
We'll
they
take
love 19% margins.
Your mother right. Industry leading margins, yet we're talking about it like it's a headwind? Get the out of here.
Tesla bull Dan Ives out with a new note saying Tesla will hit a $1 trillion market cap in the upcoming year, and he's raising his price target on the stock to $350 from $310. He is here in person. Dan, thank you. Appreciate it.
Great to be here.
A lot of people coming at you on social media about this price target, even if they're saying, well, Tesla sucks. They're coming at you from a fundamental perspective, saying, I can't do the math and the earnings, the valuation. How do you get to 350?
Tesla is where Apple was in 2008, 2009. In terms of the sum of the parts and the software piece, this is just starting, what I view as the next phase of the Tesla growth story, hits starting in 2024. And at this point, from electric vehicles, they're doubling down where others are peeling back. I think units, I think margins actually start to increase. I think this is going to be a golden year for Tesla. At the end of the year, I expect them to be above $1 trillion.
Well, Gordon Johnson, obviously a bear on Tesla, and Gordon's a great guy, comes on the show. He hasn't been right on it, but he might be at some point. We don't know.
I do. There's no way Gordon Johnson's fair value estimate will ever see the light of day unless Tesla does a 20-to-1 stock split.
He says, he wrote on X, margins and earnings are imploding, global market share is down, and there's articles claiming that Tesla knowingly sold faulty vehicles.
Yeah, now look, to his points, what I would say here is that, first off, this is not an auto company. It's a disruptive technology company. That's why, from a valuation perspective, I think this is a stock that could be up 40, 50% in 2024 because people want a Tesla. Maybe they don't want an EV. They want a Tesla, as you talked about.
Who said that?
As the great Brian Sullivan.
Well, listen, I met a car dealer. He watches the show. He came up to me. He owns a bunch of brands, and we started talking. And, and basically he was like, yeah, I'm not selling them. I think people want Teslas. They don't want EVs because Tesla, if you've driven them all, and I have, Tesla's just a different experience. The dashboard looks different. The infotainment system is very different. It's just a different thing.
No doubt.
Than an electric-powered Audi.
Well, and you're seeing Detroit peel back. You're seeing some of the European players. And that's why this was a poker move for the ages by Musk in terms of cutting prices, going after volumes. Now they're in a position of strength. And I believe this is just the next phase of the Tesla growth story where I don't think they stop at $1 trillion. I think there's just the middle innings.
Not middle innings, early innings. We're just talking about the car business. 2030, they have aspirations of building 20 million vehicles and selling them all. 1.8 million this year to 20 million in 2030. Middle innings? We ain't even sung the national anthem yet.
People love to hate on Tesla because I think they love to hate on Elon Musk. And I'll let people decide whatever they want out there, okay? Is Elon Musk hurt the company or help the company at this point? Because people don't realize Musk is not running Tesla. There is a management staff that's very quiet. They're not on Twitter. They just go about their job every day. But he's the face of it.
He's the golden
He
part.
created it. But there's a whole team actually running the company.
There's a team that runs it, but he is the hearts and lungs of Tesla. And that's from a brand perspective, as we've talked about, I still believe right now that's a contained issue relative to what's happening in Tesla. The irony is this quarter, we see a record quarter in China. So we're not actually seeing demand.
Even against BYD.
Even against BYD.
Which is the Chinese car company that's taken over China. I mean, and probably soon to come here.
Soon to come here, but in China, they've held their own.
Ford, GM, I hope you're listening. Get your together before these Chinese auto manufacturers get a foothold in the United States. Elon Musk is incredibly vital to the success of not just Tesla, but also SpaceX, Starlink, Neuralink, whatever the he decides to touch. On top of being extremely hardworking, with his inexhaustible ability to say no, that's not how it should be, does physics say we can do this and then achieve what other people find too hard or simply not worth the squeeze? Without Elon, you don't have SpaceX. Without Elon, you don't have Tesla. Not to this extent. Is that man back there a terror to work for? There is no doubt, but the results speak for themselves. Hurt the company? There'd be no company if it weren't for that man back there.
We look out, we go into this next year, margins increase, they gain share, and now full self-driving, I'd argue the AI piece could be $75 per share, and I think that's what we're going to be talking about 1-2 years from now.
That's actually kind of low, folks. I mean, we're talking about Dan Ives, Mega Bull. If he's underestimating the portion of Tesla's AI business...
What if it doesn't happen? What if full self-driving just regulators don't want it, insurance companies won't insure it, something occurs? I don't know. I hope it does, because you know what? I'll sit in the car and let it drive me to work while I do my work. But what if full self-driving never occurs?
If it never occurs, then Tesla just fundamentally, when you look at some of the parts, this is a stock that still has 30-40% upside. If full self-driving happens, which we believe as we get to level 4, and I believe they lead in that race over the next decade, then you could argue this is a stock that could go toward $2 trillion over the coming years because of disruptive tech. And going back to the Apple thesis in 08, 09 services, that's why Cupertino right now is a $3 trillion market. Many thought they'd never reach $1 trillion.
My fair value estimate bear case doesn't include anything but the sale of vehicles. No FSD, no energy division, no insurance, none of that, none of it. And at the beginning of the year, I'm going to reassess those fair value estimates. I have a feeling we're not going to be under $350 per share in my bear case. Not unless an asteroid hits 2 out of the 4 gigafactories on the planet. Tesla will solve full self-driving. I've seen the progress. It's only getting better. The only thing they need now to solve the problem, to continue the March of Nines, is time and data, both of which they have plenty of.
Elon Musk came out today, I think it was in a Twitter Spaces with Kathy Wood, or maybe it was yesterday, I'm getting old, basically saying that the stock market is kind of broken because there's too much institutional ownership and retail ownership doesn't matter enough. But Tesla, I think, is a retail investor type of stock.
And I would say that retail has been ahead of institution on this name. I mean, outside of Barron and some others. And I think now what's happening is institutions are catching up to retail in terms of what I view as a golden year ahead for Tesla.
Back in 2022, most institutional investors pulled out of anything that's related to growth stocks, Tesla not being any exception. During that same time period, if you weren't panic selling your Tesla stock, most retail investors were doubling down, myself included. But if you have a conviction, not panicking when others are fearful, you had an opportunity. Tesla up over 110% this year. In conclusion, the competition is coming, and Tesla's margins are something to be afraid of. I mean, those industry-leading margins. Whatever will Tesla do? And I have to agree with Dan Ives. 2024 will be a golden year for Tesla. In my fair value estimate base case, I have Tesla delivering their next-gen vehicles at the end of Q4, in addition to Tesla collecting fares for their robo-taxi fleet. That's all I have for you today. Be easy. Bird.